Hello everyone, good morning and welcome to today's lecture. So today we are going to discuss about Audit Committee and SEBI LODR regulations. Okay, so what is SEBI LODR regulations and why we are looking for this particular chapter? See, SEBI LODR regulations are applicable to each, to specified listed entities. Now, if your securities are listed on a stock exchange, then these regulations are applicable to you. Now, under the SEBI LODR regulations, there are certain, regulations which pertains to corporate governance, good governance, and these are required to be, followed mandatorily, and that's why these regulations becomes very important. So, to start with, I'll be starting with the regulation 18. Okay, wherein what I will be doing is first I'll take the regulation 18 that is about the audit committee. I will be discussing about the audit committee, what are the regulations specific applicable to them. Then I will do a comparison with the provisions of the Companies Act. Now, SEBI LODR regulations are over and above the Companies Act provision. Okay, so it's not something that it's a substitution, but it's something over and above my the Companies Act regulation I need to follow. Okay, so I will be doing a simultaneous comparison with the 177 of the Companies Act, where you will see, okay, these are the audit committee provisions under the Companies Act, and the same on the SEBI LODR regulation. Then we'll talk about the board composition. We'll talk about the various committees which are there under the SEBI LODR regulations, like the nomination and remuneration committee, stakeholder relationship committee, risk management committee. We'll go through those. We'll talk about related party transactions a bit. Okay. So we'll be covering these all areas under this particular LODR. I will be also providing you the detail where is a small amendment. So there is a small amendment also at one particular place. I will be highlighting that also for you guys. So it will become easy for you to understand. Okay. And I'll expect maximum participation from you guys. Okay. So let's start. Now, regulation 18. Okay. Audit committee. So this regulations provide the details with respect to the audit committee. Now, when I say with respect to the audit committee, that means it provides what is a good composition of audit committee, what are the rules and regulations of the audit committee, okay, like what audit committee should do, how audit committee should be constituted, how much time they meet in a particular year. So everything is specified in this. Okay. So now, what regulation 18 says? Regulation 18 says that every listed entity shall constitute a qualified and independent audit committee. Okay. Every listed entity shall constitute a qualified and independent audit committee. Now, these are the two important terms, qualified and independent. Reason because if you see in the going forward provisions, when we read, you will come to know that, yeah, what we mean by the qualified and what we mean by the independent, how much independent. So when I say qualified and independent, what is the relevant provision for that is that, okay, audit committee, first of all, should have a minimum 3 directors as a member. Okay. And from those minimum 3 directors, at least 2/3 of the members of the audit committee shall be independent directors. Now see, qualified and independent. So at least 2/3 should be the independent. And in the case when there is an outstanding SR equity shares, okay, at that particular point in time, this becomes that we need to have a fully independent, only independent audit committee. Fully independent audit committee at the time when there are SR outstanding shares. Okay. Then, so if If my shares SR outstanding are not there, then 2/3, otherwise fully independent. Now, when I talk about qualified, what I mean by qualified? Qualified means that all members of the audit committee should be financially literate. When I say financially literate, that means ability to read and understand the basic financial statement like balance sheet, P&L, cash flow, and one member shall have a accounting related and financial management related expertise. Okay. So one member should have this particular expertise and all members should be financially literate. So when I say qualified, that means the qualified ones. Okay. Now, next part is the chairperson. Basically, the chairperson of the audit committee should also be an independent director. The chairperson should be an independent director of the audit committee. Okay. And he should be present in each and every AGM to answer the questions of the shareholders. Usually they are present, but it is a requirement also that they should be present. Okay. Now, company secretary of the company will act as secretary to the audit committee. Company secretary will act as an audit committee secretary. Okay. Then, now, why this is important to understand is reason because these all provisions, what I am discussing, that minimum this much number of directors, minimum 3 directors should be as member, 2/3 should be, independents or only comprised of independent director when we have SR equity shares. All these things are required to be adhered to. They are required to be adhered to for a company, for a listed company whose securities are listed on a stock exchange. Okay. Then audit committee should meet at least 4 times in a year. Okay. They should meet at least 4 times in a year with there should be minimum of, there should not be more than 120 days gap between 2 meetings. So for example, first meeting and second meeting. There should not be more than 120 days gap in between both. Same way, second to third meeting. There should not be more than 120 days. So the gap between 2 meetings should not be more than 120 days. And they should meet at least 4 times in a year. 4 times. 4 times plus 120. So when it comes to the meeting, 4 plus 120, you can remember. And if you want to remember with respect to the constitution of the audit committee, simply remember qualified and independent audit committee. Qualified means financially literate plus 1 member having financial knowledge. Independent, either 2/3 or fully. And fully when we have SR. Simple. Okay. Then the quorum for the audit committee meeting. Okay. The quorum should be like either it should be 2 members or 1/3 of the members. Okay, whichever is higher basically. So either 2 members should be present or 1/3 of the members should be present. And over and above that, at least 2 independent directors should be there. So with at least 2 independent directors. So when I say it should be 1/3, 1/3 should consider at least 2 independent directors. Now, this will not be a problem when you have everyone in the audit committee as an independent director, but when it is 2/3 of the directors are independent, when there are no SR equity shares outstanding, at that point in time you need to take care. Okay, at least 2 directors, independent directors, should be present. Now, the audit committee shall have a power to investigate, things. They can seek information, so they can investigate, seek information from employees, obtain outside legal advice. Okay, they can, consult with outside expertise. So that is allowed for them, and that is required also, because now we are going to discuss the role of the audit committee. What audit committee actually does. We saw what is the constitution of audit committee. We saw what times they should meet. Now, very important to understand is what is the basically role of audit committee. Okay. So when I talk about role of audit committee, the details of the role of audit committee is specified under, if you see, there is a part C of schedule 2 of the same SEBI LODR regulation. Part C of the schedule 2 talks about, okay, what are the roles of audit committee and what audit committee should do. Okay. So I'll write it here. Role of audit committee. Okay. And review of information. By audit committee. Okay. Now this is my regulation 18.3, which says that you need to refer to the part C of second schedule. Now, the point is that why these roles are defined in SEBI LODR. We need to understand the reason. The reason is very simple. Okay. This part C, defines what audit committee should do to have a good corporate governance. See, all these regulations, all these, conditions here are promoting good corporate governance. They want a good corporate governance, good tone at the top. Okay. The prime focus is that, it should be, the tone should be maintained at the top. The good corporate governance should be there. So responsibilities should be defined. What particular, audit committee, board of directors, what are their roles and responsibilities in a particular company? It is very important. And why it is prescribed through SEBI LODR, because LODR is applicable to listed entity where public is interested. Now, if in any company, if public is interested, at that point in time, it becomes very, very necessary, to take care for all these things. Okay, to have an independent view, to have an independent monitoring system in a company. That's why these LODR regulations were brought. Okay. So what is the roles and responsibilities if I talk about for audit committee? Okay. So the roles and responsibilities first includes oversight on the financial reporting process. Okay. So they need to have a oversight, as I told you, monitoring, oversighting. So you will be hearing a lot of these particular, roles and responsibilities. Oversight of financial reporting process of company. Financial reporting process of the company, and plus disclosure, okay, of financial information to ensure that the financial statements are correct. That is the first rule. Second, Recommendation for appointment of auditor. So they need to recommend. Remember when we saw in companies audit, we saw for the appointment, audit committee recommends the name to the board of directors, then they discuss, they may agree, they may disagree. From here also these recommendations come. Recommendation, then you can say remuneration. Okay, terms of appointment and terms of appointment for auditor are decided. Okay. Third is approval. Okay. To pay approval for payment to statutory auditor for any other service rendered by statutory auditor. Remember, there was a section 144 in the Companies Act also on the same line, that auditor not to provide certain services without approval. So same way here also, approval of payment. Okay, approval of payment to statutory auditors for other service. Okay. Then reviewing the annual financial statement with management and having discussion with them. Now, when I talk about reviewing annual financial statement with management, what they need to review in that? There should be some specific thing that they should be reviewing. They should be reviewing whole financial statement. But in LODR, there has been a particular emphasis given on certain points when they are reviewing the annual financial statement. Okay, and that emphasis is first director responsibility statement. Matters which are required to be reported in director responsibility statement. Changes in accounting policies. If there are any changes in accounting policies, the reason for the change, the impact for the change. Any major accounting entries or estimations made by the management. Their reasonableness, whether they are appropriate or not, they are reasonable or not. Even at times they are required to verify whether the estimate made as of today is accurate or near to accurate when they evaluate at the later point in time in the year. So for example, last year I made an estimate. This year I had the actual number, so I'll compare the estimate with the actual one. So last year whether the estimate was correct or not. On the same line, I'll judge whether the estimate made in the correct year is appropriate or not on the same line. Adjustment made in the financial statements. Then compliance with other listing agreement requirements. Then disclosure of any related party transaction. Whether that disclosure is correct or not. If any modified opinion is there, then draft audit report, the modified opinion, the reason for the same, and everything about modified opinion. That was with respect to the reviewing annual financial statement. So these are the areas that they are required to review for financial statement, minimum at least, you can say. Okay. Then it comes, this was the annual financial statement. Now they are required to review the quarterly financial statement. Okay. Quarterly financial statement before they are sent for the approval, board's approval. They are required to review the use of the funds. Now, like they need to understand, they need to review with the management that the funds that were obtained either through public issue, through preferential issue, right issue, okay, are utilized for the purpose for which they were raised, or it is utilized for any other purpose. Now, the purpose for it was raised was mentioned in, document, the prospectus or the notice. Okay. Now they need to see that, okay, these funds are appropriately used or not. IPO, right issue, or you can say preferential issue. So any fund you raised in this particular, in these type of, issues, whether they have been used appropriately or not for the purpose for which it was raised. Then they are required to review and monitor the independence of auditor. They will also monitor whether the auditor is independent all the time, and effectiveness of the audit process. So they will also see whether the audit process that is being performed by the auditor is effective. Okay. Then it comes approval of any subsequent modification of related party transaction. So if there is any modification in the related party transaction, or any there was a related party transaction in listed entity, so approval for those related party transactions. Okay. Then it comes uh, scrutiny and detailed, review of the intercorporate loans, investments. So these are the very critical areas again, which requires compliance of Companies Act also. So that's why scrutiny of these intercorporate loans and review of these intercorporate loans is necessary for audit committee. Okay. Then review and evaluation of internal financial controls. Then review of adequacy of internal audit function in organization. Okay. Discussion with internal auditors on any significant findings. This is very important reason, because the significant findings by the internal audit team, okay, helps to build a good and very what you can say, comprehensive control environment. And Audit committee plays a very important role while reviewing all the findings of the internal audit. And this also helps internal audit function to maintain their independence and maintain their, you can say direct connect with the audit committee, so that, they are not, like, like at times it may happen that internal audit function reports to someone else, which may reduce their independence, may reduce their relevancy of the issues which are reported to the management or those charged with governance. In this case, if audit committee is directly interacting with the internal auditors, then it will help the internal audit function also to maintain their independence, and it will give that particular, access to those charged with governance to discuss the findings without any filtration or without any hindrance. Okay. So there was one question with respect to the SR equity shares. Now, what, like, you want to understand what are the SR equity shares? Okay. SR equity shares, basically you can say, they are the equity share itself. They are the equity shares, but the thing is that they have a superior right than the normal equity shares. So, for example, if there is a equity share and there are, you can say, two different class of equity shares. One class has certain rights, but another class is superior that has additional rights, maybe veto power or maybe something like that for the, in case of voting, or in case of, participation of profits or something like that. They have a specific power that is superior rights of equity share, that are SR equity shares. SR stands for superior right. I hope I am clear. Okay. Any further doubts, guys? Any further doubts till now? Okay. Then the next function of the audit committee is, okay, to review if any, findings are there other for any other risk function in the organization. So they also need to review the findings by any other risk function in the organization. In organization, there is only not only one risk function, that is internal auditors. There are various risk functions. Okay. So review of findings of any other risk function. Okay. Then they need to have a discussion with statutory auditors before audit comments about the nature and the scope of the audit, what they are going to plan in their audit, what it will be the, the detailed scope, which will be the items that will be scoped out. Okay. And even they need to have a post audit discussion with auditors to ascertain, okay, any concern is there, any area identified where they need to, have further audit procedures, where they need any, clarification from management, something is pending or not. So pre and post audit discussions. Okay. Then they are required to look for the reasons, and at times, we saw in one of the cases there was a default in repayment of loans. Okay. Or to debenture holders, or to, any stakeholder. So in one of the audit report, we saw there was a default. The same is required to be reported in the CARO also. But as an audit committee, our role is, or as an audit committee, the role of audit committee is to review the reason for the default in the payment. Why there was a default? To review the reason for the default in payment. Okay. Then they are required to review the function of the whistleblower policy. Whistleblower is very important in any of the company. Reason because if there is something going wrong, employee or anyone part of the company can blow a whistle and can report things to the management or those charged with governance. Now, if that function is not working appropriately, then no one will use it, and that's a very that will be a very big problem, because that may lead to unidentified frauds or unidentified issues. So that's why whistleblower, to review the functioning of whistleblower policy or whistleblower mechanism is very important. Okay, then carry out other functions. It may include, some other specified functions they might have already taken. So other function, if they have any taken. Okay. Now there are two additional points. Okay, that they are required to do. One, review of the utilization of loans and advances from that the loans and advances were obtained from holding a subsidiary company exceeding 100 crore rupees or 10% of the asset side. So review of utilization of loans when these loans are either exceeding rupees 100 crore or they exceed 10% of the asset size. Ten percent of the asset side, whichever is lower. Now, when I talk about reviewing of these loans, okay, reviewing of these loans or advances or maybe investment by holding into the subsidiary. Okay, so loan given by holding to the subsidiary, investment made by holding into the subsidiary, and they are required to check for the subsidiary. So let's say I'm audit committee of holding, I will be looking for the subsidiary. Okay. So this was one of the these were the functions of audit committee specified, and they need to review these all information. Okay. Now there is this was a part A. This particular was this particular was clause A of part C. Now there is clause B also of the same part. What this clause says that, and how it is different from A. So if you see the clause A specifies the roles of audit committee. But clause B says that, okay, this is the mandatory item that audit committee should do, mandatory. That was the roles and responsibilities that what they should review. But here there is a specific act they need to perform. First one is discussion of financial results and financial outcome of the operations. So They should have a discussion with management and analysis of the financial condition of the company. Second, if any management letters or letters of internal control weakness has been issued by the auditor, they need to review the same. Then internal audit report. Then they need to see appointment of same, like earlier we saw the appointment, remuneration, then terms for appointment of auditor. Here it will be of internal auditor. Then they need to see a statement, or they need to review the statement of quarterly deviations. Okay, statement of deviation. Now, what is, which deviations we are talking about? Any deviations, like that there is for the funds, or for there are regulations specified a statement of deviation under regulation 32, 30, 32(1), 32(7). If any statement being prepared, then those statements they are required to review. So these are the roles, mandatory one, and you can say the information that they should review, clause A, okay, for the audit committee. Any doubt till now? Any doubt? See, you might be wondering, like, there is a lot of information with respect to the roles of audit committee. What I'll suggest is, there is no need to, mug up. But the thing is that understand why these roles are there. Understand why this has been, put on the audit committee. And then you will be easily able to remember, okay, these are the roles and responsibilities. This is actually audit committee does. In real life also, we do have discussion with audit committee before finalizing audit report. Okay, if on certain clients, if we are, as an internal auditor, external internal auditor, then at that point in time also, before issuing the internal audit report, or before, having any significant identifications, we have discussion on with internal auditor before even, the what do you say, before the the report, before the financial statement being issued, quarterly financial statement or annual financial statement, audit committee meeting happens. Okay, before the results are out, audit committee meeting happens. So in that audit committee meetings, these all things are reviewed and a detailed discussion happens. So these meetings happen, they are hour long, or sometimes at least 3 to 4 hour long meetings, where independent directors are there. So a lot of things they discuss in those meetings. So this actually happens. Any doubt till now? Any doubt? So this was the regulation 18 that we are talking about. Okay. Now, other than this regulation 18, okay, the next area that we need to see is how it is different from section 177 of the Companies Act. That is same on the audit committee also. So I'll just provide, the detail of section 177 of the Companies Act, which specifies the audit committee, the provision for the audit committee. Okay. Now, what this section says that every listed company, every listed public company, and such other class companies shall have or shall constitute an audit committee. Every listed public company and other classes of company shall constitute an audit committee. Now, which are the other classes of committee? Other classes of companies is public companies having paid up share capital of 10 crore or more, public companies having turnover of 100 crore or more, public companies having aggregate outstanding loans exceeding 50 crores or more, and that should be based on the last audited financial statement. Okay, so paid up share capital 10 crores, turnover 100 crores, and outstanding loan 50 crores or more as per the latest audited financial statement, then you are required to constitute an audit committee. Remember, this is for public companies. Public companies. Even if it is a private limited company having turnover 100 crore or more, they are not required to constitute an audit committee. We are only talk about public companies. So P10 R100, okay, or you can say D50, debt 50, revenue 100, and paid up share capital 10 crores. If any of the condition is satisfied, have an audit committee. So every listed public company and other classes we just saw should have an audit committee. Now, audit committee should be made of minimum of 3 directors with an independent director forming a majority. So here, half of the majority of the directors should be independent. But when we saw in regulations, the regulation says that at least 2/3 of the members should be independent. When you form with 2/3 members, you already have a majority. So if you comply with the SEBI LODR regulations, you will directly comply with this one also. Then, provided that the majority of the members, including chairperson, shall have ability to read and understand. Majority of the members, including chairperson, read and understand the financial statement. Okay, and over there, it was said that okay, all audit committee members should be financially literate, means ability to read and understand financial statement. But here it is talked about majority one. So if you comply with the LODR, you comply with this also. Okay. Now, every audit committee, okay, what is the role of audit committee as per section 177? The role of audit committee is to provide recommendation for appointment, remuneration of the auditors of company, review and monitor auditors' independence, examination of financial statement, approval of any subsequent modification of transactions of the company with related parties. Okay. Now there are conditions for the approval of of the related party transaction also, that they can provide omnibus approval for the related party transaction subject to the section 188. So omnibus approval for related party transaction can be provided, but they need to check for the provision of section 188. Okay. Now, if any transaction not exceeding 1 crore rupees is entered by a director or officer without obtaining the audit committee's approval, okay, and the audit committee is not rectifying that particular transaction within 3 months, then that transaction becomes voidable at the option of audit committee. So that is also one of the key important areas that where they need to see, okay, any transaction entered by the director, okay, which is not exceeding 1 CR, any transaction not exceeding of 1 CR entered by a director without obtaining approval, okay, which is not rectified by the audit committee within 3 months, that becomes voidable at the option of the audit committee. And if audit committee voids that particular transaction, then the director who entered into the transaction needs to indemnify the company. Okay. Now, this was particularly has an exception. The exception says that the above thing will not apply to, sorry, the above thing will not apply to holding and it's fully owned subsidiary. So exception to above. So if it's a transaction between a holding and solely owned subsidiary company, then this will not apply. What other things audit committee is required to do is scrutiny of intercorporate deposits, valuation of undertaking, evaluation of internal financial controls, monitoring the end use of funds. So these are the things they are required to monitor and review. These are the same thing that we saw in LODR also. So if you comply with the LODR, you comply with this also. Clear? Any doubts? Any doubts till now? If the transaction exceeds 1 CR, prior approval is mandatory. Any doubts? Okay. Now, there are some other powers which are given to audit committee under section 177. Okay. That may include, like they may call for comments from the auditor about internal control system, the scope of audit, including the observations of the auditors and review of financial statements. So they can, ask auditors to provide additional information. They have authority to investigate into any matter in relation to items specified above. So these items, they can investigate, they can ask for additional information to fulfill their duties. So they have that powers. Okay. They can take professional advice from external sources also if they require. They can have full access to the information of contained in any of the records of the company. So there is nothing, any information that should not be available to them. So auditors of the company and key managerial personnel shall have a right to be heard in the meetings of audit committee. Okay. When they are discussing auditor's report or they have something discussing of that particular nature. Okay. Now remember recommendation, remember we discussed that, audit committee is required to recommend a name. So here that's one of the function of the audit committee, that audit committee should recommend a name to the board of directors for the appointment of the auditor. Also, there is one more disclosure that the board is in board's report that the board of directors are required to give is when there was a recommendation by the board. Okay. When there was a recommendation by audit committee to the board and board did not accept that recommendation. At that point in time, board report shall disclose the composition of audit committee. Okay, shall disclose the composition of audit committee. Now, when the board did not accept the recommendation of audit committee. So at that time, they need to provide the composition of the audit committee and in the board's report. Now, there is a provision to establish a vigil mechanism for certain classes of companies. Okay. So for vigil mechanism, audit committee plays a very important role. Audit committee needs to ensure that vigil mechanism function or mechanism is appropriately working and that is effective in the organization. So there are rules specified for the vigil mechanism. Let me. So these are the rules that are specified for the vigil mechanism, wherein which companies are required to have this particular mechanism. So every listed company and the companies belonging to the following classes. So first, it's a listed one. Second, companies which accept deposits from public or companies which have borrowed money from banks and financial institutions in excess of 50 CR. These companies are required to have a vigil mechanism. Now, these companies, what they should do is they are required, in these companies, audit committees are required to oversee the vigil mechanism. Okay, through through appointing some members and through appointing some persons to look after this particular one. In case the company does not have the audit committee, so for example, company is not required to form an audit committee. In that case, what is the scenario is board of directors are required to nominate a director, okay, who will play the role of audit committee for the monitoring the vigil mechanism. So if audit committee is not required to be constituted, then board of directors will nominate a director who will play the role of audit committee for the purpose of vigil mechanism. Now, vigil mechanism should provide adequate safeguard against the victimization of the employees. Now, what happens is if you report something through vigil mechanism and later on, someone identifies and let's say, for example, retaliation happens. So, for example, I report for my manager that my manager is doing incorrect thing. And then, my manager comes to know and he tries to, create issues for me. He retaliates back. So there should be adequate safeguard for a vigil mechanism, in a vigil mechanism, that if I report something, let's say if I report for integrity, in an organization, there are integrity helplines, there are whistleblowers, there are different kind of, vigil mechanisms. So if I report anything and if something comes to me, then there should be adequate safeguard also. So vigil mechanism should provide for the adequate safeguard of the victimization of employees or directors who avail or who opt for this particular reporting. Another thing is vigil mechanism should have a direct access to the chairperson of audit committee, okay, or the director nominated to play the role of audit committee. So if there is something important which may which I may believe, let's say for example, I want to report something and I believe, okay, now this may happen, that the some members of the audit committee may also be involved in this particular issue or fraud, then I should have access to the chairperson of the audit committee directly. Okay, so that if it is an exceptional case or critical case, I can report to them directly. On the other way around, if any director or employee files frivolous complaints or complaints just to harass or misuse the powers of the vigil mechanism, then they should also take action against that particular director or employee, and they should may also provide any further what you can say penalty to them. So that was about the vigil mechanism under Companies Act. Now, the one more thing is that the vigil mechanisms establishment should also be disclosed by the company on its website. Okay, so these details are required to be posted on website also. Any doubt? Any doubt? Any doubt? So this was section 177 about audit committee. This specifies what should be the audit committee, constitution, role, some important areas where audit committee needs to play an important role, like vigil mechanism. Any doubt till now? Okay. Okay. If no doubts, then simple. I'll ask one question. Okay. Let's take one MCQ first. Okay. Then we can move forward. Vigil mechanism is a broader. So there is one question: is vigil mechanism same as a whistleblower? See, when I talk about vigil mechanism, it's something bigger than the whistleblower. What is vigil mechanism? Basically, it may include various things like integrity helpline number, ethics helpline number, ethics reporting, integrity reporting, whistleblowers. So there can be a lot of things included in this particular area. So it's a broader term. So another question is vigil mechanism approached by the outsider? Outsiders, yes. Reason because see, for it again, it depends upon company to company. But in certain companies, as I said, the details of vigil mechanism are required to be placed on the company's website. Over there, they also provide the helpline number and the mail IDs to contact. And in that case, someone from the outside can also use that particular one. See, most of the time, whatever things are reported in the vigil mechanism are something of anonymous nature. So no one discloses their name, whether they are employee, they are not an employee. But again, that again depends upon whether that function is available or feature is available to the outsider or not. Any further doubt? Okay. If no further doubt, then let's take one MCQ. Okay. Audit committee of AMPL Limited. Audit committee of AMPL Limited is consisting of 7 directors: Mr. Ram, Mr. Sham, Shweta, Komal, Jaya, Ms. Prabha, and Mr. Anand. Out of these, Mr. Sham and Mrs. Shweta, the chairperson of audit committee, and Mrs. Komal were not independent directors. Okay. Now, the chief compliance officer of the company raised an issue that the company has not complied with the SEBI LODR regulations. He also stated that CH Kush should focus on while perform this. He should have focused this on while performing his audit. So you are required to report whether appropriate, compliance of the SEBI LODR regulations has been done or not by selecting one of the below option. So first option, that regulation 17 of SEBI LODR regulation says that there should be minimum 2 directors as a member. Okay, at least 1/3 of the members of the audit committee shall be independent directors, and chairperson of the audit committee shall be independent director. Regulation 18 says that at least minimum 5 directors, 1/3 of the members of the audit committee shall be independent directors. Chairperson of the audit committee shall be a non-independent director, provided not more than 1/3 of the directors shall be executive directors. Regulation 19, minimum 5 directors. Okay, 1/3 of the members of the audit committee shall be non-executive directors. Chairperson should be independent directors. Chairperson is an executive director, then not more than 1/3 director should be executive director. Okay. And last one, regulation 18, minimum 3 directors as a member. 2/3 of the members of the audit committee shall be independent directors, and chairperson of the audit committee shall be an independent director. What is the correct over here? Correct, Manini. What is the correct option over here? Correct, Kaushik. Correct, Soham. Correct, Shrishti. Correct, Balram. Okay, now, first question. How many, okay, what is the current position of the internal audit, audit committee? How many members are independent, and what is the percentage of the independent members as of now? Correct, Gunjan. So what is the, as of now, the how many are independent, how many are not, and what should have been independent? Like what should have been the number of independent director in this particular audit committee? So what should be the appropriate constitution of audit committee in the current case? So they have a 7 directors. What should be the appropriate constitution? So let us go back to the particular provision. Minimum 3 directors, at least 2/3 shall be independent. Okay. So out of 7, 3 or 2/3 shall be independent. Okay. So if you do the 2/3, basically it will give you 5. So either 3 or 2/3, whichever is higher, basically in the current case. So in the current case, it will be 5. So 5 directors should be independent. Now, out of 7, 5 should be independent. Now, how many are independent? So, if you see, Mr. Sham, Miss Shweta, Mrs. Shweta and Mrs. Komal were not independent. 3 were not independent out of 7. So, out of 7, if 3 are not, then the rest 4 were there. So we are first of all not reaching to this number of 5. Then it is said that the chairperson of the audit committee shall be an independent director. In the current case, chairperson Mrs. Shweta was not an independent director. Again, second thing, chairperson was also not an independent director. Okay, and hence, in this case, they have not complied with the SEBI LODR regulation. Correct, Kaushiki. Correct, Manini. Correct, Soham. Correct, Avija. So this is how you are required to review or see the constitution of audit committee. It may happen that this question comes as a form or as a part of a descriptive one. Over there, you need to explain what is the provision first, that 3 or 2/3 should be independent, and chairperson should also be an independent director. Okay. Then you need to say, okay, in the current case, total there are 7 directors, out of which 3 are not independent, 4 are independent, and chairperson is also not independent director. And accordingly, this should have been like, at least 5 directors, 2/3 should have been independent, chairperson should have been independent, and hence they have not complied with the provisions of SEBI LODR regulation. This is how you are required to answer a question when it is a descriptive one. See, so to avoid the confusion, audit committee of AMPL Limited is consisting of 7 directors, not the board of directors. It's the audit committee. If you have a fraction in calculation, increase the 1. So round it off to the next highest number. So let's say, for example, in the current case, we have 7. So if you do the 2/3 of the 7, it will give you 4.67. But I cannot have a 4.67 director. So 0.67, from where I will bring that? So I will round it off to the 5, next highest number, so that it will comply the 4.67 number. Okay. Any doubt with respect to this question? Any doubt? Okay. If no further doubts, what we can do is I can shift to the next topic and then I'll take question for that one. So the next topic that I want to take is resignations from auditor. Okay. For a listed company, there is the additional requirement for the resignations by the auditor. What is there is, if, first of all, it is applicable to all listed entities and their material subsidiaries. Okay. And these conditions are required to be complied when they are appointing or reappointing an auditor. So what are the condition is, if auditors resign within 45 days from the end of a quarter, within 45 days from the end of a quarter of a financial year, then the auditor, before such resignation, needs to issue limited review report or audit report for such quarter. Simple. If he resigns within 45 days, issue limited review report. If he resigns after 45 days, you need to issue limited review report of the current quarter, means of the such quarter, as well as the next quarter. Reason because if I talk about a quarter, okay, if I talk about 3 months, that is 90 days. And if I'm saying out of that 90 days, 45 days has already passed, that is resigns after 45 days from the end of quarter. Okay, means he resigning after 45 days of the end of the quarter. That means it is again within 45 days for the next quarter. I'll explain you with an example. My first quarter ends on 30th June. Then subsequent 30th September. Then 31st December. And then March. Okay. Now, if a person, an auditor, resigns before 45 days of the end of the quarter, let's say he resigns somewhere 10th August. Okay, before 45 days. Now, here we have a 45 days before the end of the quarter. Okay, then it is fine. If he resigns, okay, so the first says that if he resigns within 45 days, means if he resigns over here after 15 August. So then he needs to issue the limited review report or audit report for this particular quarter. If he resigns after 15 August, that is before 45 days from end of quarter. Now, next is that if he resigns after 45 days from the end of quarter, after means he is resigning after 15th November. So I'm talking about, let's say, for example, this 30th second quarter. I'm talking about second quarter. So he has resigned after 15th November. If he has resigned after 15th November, again, the first condition will be applicable, that he has resigned before 45 days from end of third quarter. On the same time, this condition is there that he has resigned after 45 days of second quarter. Okay. So these two conditions are simultaneously getting fulfilled. If an auditor resigns after 45 days of the end of the quarter, by default, he has resigned before 45 days of the end of the subsequent quarter. So here, if you see the second and third quarter, you will come to know that, okay, after 45 days of the second quarter will become within 45 days of the third quarter. So in this case, what he needs to do is, he needs to not only issue the report of the quarter that has passed, but of the quarter which is coming. So he needs to issue the report of this second quarter and third quarter as per our example. Okay, when it is after 45 days from the end of a quarter. And here I'm talking about, let's say, for example, second quarter. So if he has resigned after 45 days of the end of the second quarter, he needs to issue report of second plus third. And if he's resigning within 45 days from the end of the quarter, within 45 days, let's say second quarter, then he needs to issue report for only second quarter. Okay. Now, the third criteria is if auditor has signed. If the auditor has signed all the 3 quarters, or first 3 quarters of the year, or the financial year, means he has signed all the 3 quarters. Okay. You can say first 3 quarters. Then, before resigning, the auditor is required to issue limited review or audit report for the last quarter, as well as audit report or for the financial year. Okay. So if he has signed first 3 limited review reports or audit reports, then irrespective whether he is resigning within 45 days, before 45 days, after 45 days, he is required to issue limited review report of the last quarter also. So he cannot, resign before issuing the report. He needs to issue the report and then resign. Clear? Any doubt? Any doubt with respect to this? Okay. If no doubt, then I'll move forward. Now, other than this condition of the days, there are certain other things also that the auditor and the management is required to perform when an auditor resigns. And these are, if any concern, if in any case, now any concern has been raised by the auditor. Okay. Now, if any concern has been raised by the auditor with management of the listed entity, with respect to, non-availability of the information, non-cooperation by the management, which is hampering the audit process. Okay. So in that case, the auditor first is also required to approach the chairman of the audit committee. Okay, okay. Before I resign, I'll approach the chairman of the audit committee that there is a non-availability of the information, non-cooperation by the management. Okay. And that has been raised to the management also, which is impacting my audit procedure. And then audit committee shall receive directly and immediately without specifically waiting from the auditor this particular information even before my quarterly meeting. So whenever auditor face any information, they need to reach out to the audit committee chairman. Auditor shall approach the chairman of audit committee immediately without specifically waiting for quarterly audit committee meetings. So he should reach immediately. Okay, that this is the problem I am facing. Sorry. Then in, let's say, for example, he reached out to the audit committee, but still if he proposes to resign, okay, then what he needs to do is along with all the information and documentation that was he needs to bring to the notice of the audit committee all the information and documentation that he was having to prove or to to justify that okay, this is a concern that I am having and because of which I'm resigning. Okay, so he needs to provide the details for all the concerns and the relevant documents specifying the concern to the audit committee when he proposes to resign. So if auditor proposes to resign, all concerns, relevant document shall be brought to the notice of audit committee. Okay. Now, if this is because of the non-receipt of the information or explanation from the audit committee, as I said, they are required to inform to the audit committee the details of the information that was sought from the management and not provided by the management. So, auditor needs to provide details of the information and explanation sought and not provided by the management when we are resigning due to non-receipt of the information. Reason because in that case, audit committee might help us to get the information from the management. Okay. Now, there is one more area where when we do not receive an information as a part of auditor, what we should do. Okay. In case of a listed entity or material subsidiary, if management does not provide information to us while carrying on the audit, we can also provide disclaimer of opinion in our audit report. We can give a disclaimer that okay, we are not able to get the information from from management or audit committee, and hence we are not expressing any opinion. Okay, so so this we can do while issuing the audit report when we are not receiving any information which is necessary for the purpose of our opinion. Now the question comes is that is also required as a part of engagement or appointment letter that that if we do not receive if we like these are the terms and conditions that the auditor needs to comply with, and if any of the terms and conditions are not complied, then there will be an issue. So all these things that we are discussing over here, that should be part of the engagement letter also. Okay. Then now we already have seen that as per the Companies Act, when an auditor resigns, they are required to provide the reason and information, okay, upon their resignation. So same way here also, the listed entity upon resignation of the statutory auditor, or in case of its material subsidiary, shall obtain the information from the auditor. Okay, there is a format given in this particular there was one of the circular in that circular, okay, in annexure A, they should obtain the information from the auditor and the same is required to be submitted. That information is required to be submitted to the SEBI. So if I have that particular let me check if I have that particular format, I can show you guys. Just let me bring that annexure to the to show you. Yeah. Okay. This is the annexure in which the management and the audit committee is required to obtain information from auditor when they resign. Okay. Wherein name of the listed entity is there, details of the statutory auditor, name, address, phone number, email, details of association with the listed entity, like date on which they were appointed, date on which the term of statutory auditor was scheduled to expire, prior to resignation, the latest audit report or limited review report submitted by the auditor, details, detailed reason of resignation. Okay. In case of any concern, efforts made by the auditor prior to resignation, including approaching the audit committee, board of directors, or any other thing. So they are required to provide the date of communication made to audit committee or board of directors. Okay. In case the following information requested by auditor was not provided, then whether the inability to obtain sufficient and appropriate audit evidence was due to management imposed limitations, or whether there was a lack of information, that would have significantly impacted the financial statement or financial result, whether the auditor has performed, alternate procedures or evidence to gather the audit evidence. Okay, if they were not having the information, whether the lack of information was prevalent in previous reported financial statement also, like we already reported in previous financial statements or results that the information was not there and this was again the continuation of that. Any other facts? Okay, so these are the details that are required to be provided. Sorry. Yeah. These are the details which are required to be provided and which are required to be obtained from the auditor. And this information will be provided by the management or this information will be provided by the audit committee to the SEBI. Okay. So that was one of the details with respect to the resignation by the auditor. Any doubt? Okay, so there is a question. If a limited audit report is issued, will the next auditor perform the audit of previous quarter? Answer is no. If a limited review report is already issued by a particular auditor, then if that auditor resigns and a new auditor comes into the place, the new auditor will not review the previous audit report or previous limited review report. Any further doubts? Okay. If no further doubts, then what I suggest is let's take a quick 10-minute break. After the break, we'll cover the questions and MCQ for this resignation of the auditor topic. Okay. Okay. Let's take a quick 10-minute break. निसर्ग जी, निसर्ग जी, निसर्ग जी, निसर्ग जी, Hello everyone, welcome back. Let me take up some MCQs, and before that there is one doubt, one question which has came. Like so the question is like LODR deals with only post-listing requirements and exclude all the pre-listing requirements. Okay. Now the thing is, I'll explain you what is LODR basically. Where is the LODR coming from and what is the purpose of LODR? Okay. LODR, when I talk about, it's nothing but listing obligations and disclosure requirements. Now, these are the requirements which are required to be complied with once your securities are listed on any of the stock exchange. Okay, because when your security is listed on the stock exchange, public can be, like public can be interested in your company very easily. It's available to the available to the larger public, and that at that time it is very important, just to have a good corporate governance, as I said, and a good, control environment and good independent review mechanisms within the company to avoid any kind of fraud or issues or errors. For that purpose only these regulations are applicable. Now these regulations generally, as I told you, are applicable when your securities are listed on any of the stock exchange. Okay, so these are after listing of the securities. So there is a separate SEBI regulation which deals with the listing of securities basically. So if I tell you the name, so there is one regulation issue of capital and disclosure requirements, that is ICDR, SEBI ICDR regulations, issue of capital and disclosure requirements. That is which deals with the issue of capital, issue of securities. But LODR, that's the listing obligation and disclosure requirements, is post listing of the securities on the stock exchange. I hope I am clear. Okay. Any further doubts? No? Okay. Let us move to the MCQs. Okay, first I'll cover one of the question. Okay. Mr. A of Cayman Company was appointed statutory auditor of Home Solution Limited, a NSE listed company, for FY 21-22. For the quarter ended 30th September 2021, Mr. A was unable to issue limited review report due to limitation placed by management of the company. Hence, in 25/10/2021, Mr. A decided to resign from the position of the statutory auditor. Kindly guide with respect to Mr. A with respect to the obligation under SEBI LODR regulations read with relevant circulars. So you tell me, what is the obligation over here? So he has resigned on 25/10. Okay. He was appointed for FY 2021-22. Now, due to limitation placed by the management, he resigned. Now, what are the obligations over here of Mr. A? Good, Soham. Come on, guys. What are the obligations of Mr. A in the current case? Pretty simple. There is nothing difficult in this. We just now discussed. Correct, Shrishti? Come on, guys. See, we just discussed this particular provision. I'll give you a hint, 45 days. Okay, Manini. Consider, read the, remember the provision of 45 days over here. Okay, let's go back and see. So what is the provision? If auditor resigns within 45 days of the end of second quarter, he needs to issue limited review report and audit report for such quarter. If he resigns after 45 days from the end of the quarter, then he needs to issue report of such quarter and the next quarter. In this case, he has resigned on 25/10. Let's say, let's take a timeline approach. 30th September. I'll go 45 days up before. 45 days before, what will be the date for me? 15th of August. 15th of August. Okay. I'll go 45 days down the line. 45 days after. Okay. So what will be the date for me? 15th November. Okay. Now, if auditor resigns after 15th November, if he resigns after 15th November, after this, then he needs to issue second and third. Okay. But he resigns in between anywhere over here, like after 15th August, but before 15th November. If he resigns in this particular period, he is only resigning. Sorry. Within 45 days. Okay, and he will only issue second quarter. Clear? See, if he resigns after 15th November, then he needs to issue third quarter also. Because from 15th November to 30th December, this is within 45 days for third quarter. But he has resigned somewhere between on 25/10/2021. So he has not resigned within 45 days of the third quarter. So third quarter will not be applicable to him. Only second quarter will be applicable to him. Clear? So let us see the answer. If auditor resigns after 45 days from the end of the quarter of the financial year, then the auditor shall, before resignation, issue the limited review report for such quarter as well as the next quarter. But in our case, it is like 25/10, not before that. Okay, so 30th September was the quarter, 25/10 was the particular middle. If this was the case, like for example, if this was the case of 25/11, let's say I change this particular date, I make it 25/11. Let's say I make it 25/11, then 25/11 would have fallen after 15th November. After 15th November, somewhere here. In that case, I would have been required to issue both quarters. Other than this, what are the things that auditor is required to, or management is required to do is, okay, in case of non-cooperation or non-availability of the information, the auditor is required to approach chairman of the audit committee immediately, without any specifically waiting for, without any delay, to inform that, okay, this is the issue that we are facing. We are not getting information. Okay. In case auditor proposes to resign, he needs to, provide all the relevant documents and all the, concerns to the audit committee. And when such resignation is due to non-receipt of information, okay, an explanation from the company, then auditor is required to provide the list and detail of information and explanation sought from the management, and which was not provided by the management. Okay, and this all details, these details are required to be obtained from auditor and required to be submitted to the SEBI in Annexure A. We saw what is Annexure A. Okay, so this is required to be submitted to the SEBI in Annexure A. So this is particular answer for this particular question. Very important to understand this timeline. Very important. Reason because within 45 days, after 45 days of the end of the quarter. So very, very critical to understand. Okay, just to discuss further on this, I'll give you an example. 30th September. Somewhere between comes 15th November. This comes 31st December. Okay. Then 31st March. Now here between comes 15th Feb, let's say. Okay. Now, if, let's say for example, if the auditor resigns, let's say on 1st January 2022. Okay. If the auditor resigns on this particular date, if the auditor resigns on 1st January 2022, then which all audit or limited review reports he needs to sign? Now he has resigned on 1st January 2022. Which all audit reports or limited review reports he needs to issue before resignation? Okay. Okay, Shishti. Good Manini. Which all audit reports and limited review? Okay, good Shishti. Which all audit reports or limited review reports he is required to issue? Come on, guys, pretty simple. He has resigned 1/1/2022, 45 days. Is it after 45 days of the end of the quarter or before? Pretty easy. Come on, guys. If he resigns on 1/1/2022, which all quarters audit report or limited review report he is required to sign? I have received 3 answers as of now. I'm expecting more. Pretty easy. There is nothing difficult in this. Reason because it's very crucial to understand this particular timeline concept, because usually it has been, like it has also been asked in the exam. If you don't have the clarity, you may get confused within the dates, because it's related with the dates and the number of days. Okay, so if you are saying second and third quarter, like first, second, and third quarter, or till third quarter, we forgot one important thing. That is this one. If the auditor has signed first 3 quarters of the financial year, then he needs to sign for the last quarter also. In this case, he has to sign the 3 quarters. Okay. He has to sign the 3rd quarter also. So first 3 quarters already signed. Like he has to sign the 3rd quarter. So first 3 quarters signed by auditor. Although he has resigned before, like, even before 45 days period, like let's say 15 Feb in the current case, still he will be required to issue this limited review report before his resignation. So technically, he cannot resign over here till the time he do not issue limited review report of 31st March, because he has already issued first 3 quarters audit report or limited review report. So for all the 4 quarters and for the financial year also, he is required to issue the report. Clear? So here in this case, all 4 quarters plus annual audit report will be issued by this auditor. Okay, all 4 quarters plus annual report. Reason because for the first 3 quarters he is already issuing, and in the provision it says that if he for the first 3 quarters, if he has issued, he has signed, then he needs to do for the 4th also. Clear? Let us see one more question on this. Mr. Bharat was appointed as a statutory auditor of N Limited and O Limited. Both companies were having their base in Mumbai, and they recently issued their shares on stock exchange. For the financial year 2021, Mr. Bharat has signed the limited review report for each quarter till quarter ended 31st December 2021 for both companies. Owing to his personal commitment and increased workload, he tendered his resignation to N Limited on 30th January 2022 and asked the company to appoint another auditor to issue the audit report for the remaining quarter and for the financial year whole. But management of the company did not accept the same. Mr. Bharat continues to act as an auditor for O Limited. During the first week of March, Ms. D, wife of Ms. Bharat, had borrowed a sum of 5.15 lakh from the company for her personal use. Having come to know about this, Ms. Bharat immediately informed the management that he has been disqualified to act as an auditor and told them that he won't be issuing the audit report for the last quarter. But the management of the company argued that it's legal responsibility of the Bharat to do the same. Whether the contention of management of N Limited and O Limited is justified in asking Mr. Bharat to issue the report for the quarter for financial year 21-22 as a whole, despite his resignation. So what should be the answer here? Okay, let's target one by one. First, let's target for N Limited. Sorry. Yeah, let's first target for the N Limited. So N Limited, what he did is he issued till quarter ended 31st December 2021. Then he tendered his resignation on 30th January 2022. Now you tell me, what is the obligation of auditor in the current case for N Limited? Come on, guys. So what is the provision for N Limited? Correct, Shrishti. So correct, Manini. So what will be the case for N Limited? Come on, guys, pretty simple. We already discussed just now the last example. What will be the case for the N Limited in the current case? Like which all audit reports or limited review reports Mr. Bharat is required to issue for N Limited. So he was there till quarter ended 31st December. He tendered his resignation to N Limited on 30th January. He was appointed for FY 21-22, where he has signed all the audit reports or limited review reports till end of 31st December quarter. So, so there is one question: how a limited review report is different from audit report? See, as the name suggests, it's a limited review, not a detailed audit. So it's a limited review, not a detailed one. So, guys, the provision says that if the auditor has resigned within 45 days from the end of the quarter, but before after, like before the period of 45 days, after the end of the quarter is not yet started, in that case he will be required to issue the audit report of that particular quarter. However, in the current case, what is the scenario is that he has issued all the 3 quarters. So he will be required to issue the 4th quarter also. So 3rd quarter he has already issued, plus now 4th quarter plus annual audit report he will be required to issue. So for all the quarters he is required to issue, he cannot resign. Clear? It was pretty simple for N Limited. Now let's talk about O Limited. So N Limited, pretty simple. I'll move down. Now let's talk about O Limited first. What was the scenario in O Limited? Same. He was also O Limited, but during first week of March, Miss D, wife of Mr. Bharat, Mrs. D, wife of Mr. Bharat, borrowed a sum of 5.15 lakh. Mr. Bharat immediately informed the management that he has been disqualified to act as an auditor and he won't be issuing the report for last quarter and final report. But the company argued that it's legal responsibility of Mr. Bharat. Now you tell me, in case of O Limited, what will be the responsibility of Mr. Bharat here? That's the very important part, Shrishti. That's the only thing we need to understand over here. For that purpose only, I have taken this particular question. Reason because there is a little change compared to the other questions. Till now, auditor was the one who was tendering his resignation, but in the current case for the O Limited, auditor is disqualified. Come on, guys. What should be for the O Limited? For O Limited, what should be the case? What limited review reports and audit reports should Mr. Bharat issue before he tenders his resignation due to disqualification? Come on, guys. Absolutely correct, Sumit. So,
I'll explain here. Now, if in the case the auditor is rendered disqualified due to any conditions mentioned in 141 of Companies Act. What is 141 of the Companies Act? I'll go back and I'll explain. Disqualification, that is auditor not eligible to be appointed, and in that there was one of the condition that in debt to the company holding subsidiary associate exceeding amount of 5 lakh rupees, if auditor or his relative or his partner is in debt to the company of an amount exceeding 5 lakh rupees, he will be held disqualified or not eligible to be reappointed. Correct? Now, another thing was in 141 that if a person has been, disqualified, okay, I'll tell you. So, yeah, if a person has been disqualified, okay, due to any condition specified under 141, okay, that will be termed as a casual vacancy and he needs to vacate the office immediately. That we discussed in 139, appointment for the auditor also, that when the auditor gets disqualified because of any of the condition under 141, then it will be treated as a casual vacancy. Remember that we discussed? Now, in this case, this casual vacancy is there, okay, and he has been disqualified because of, because of the 5 lakh rupees one, because his wife, his relative is indebtedness. Now, if due to any of the condition of 141, if that auditor becomes disqualified, then in that case, the provisions of this circular will not be effective. The provisions of this circular basically will not apply. So in the current case, O Limited, in case of O Limited, what will happen is Mr. Bharat will be immediately, okay, immediately he will be disqualified and he will not issue fourth quarter plus final audit report. So here 141 will come first, then the circular will come. Correct, Sumit. So audit report is for the end of the year and limited reviews are for the at the end of the quarters. So in this case, only 3 quarters that he has already issued, no need to issue anything further. 141 will have a priority compared to the circular. So if I have to show you the circular itself, if I have a circular itself, I'll show you. Wait. Okay. This is a SEBI circular itself that we are discussing as of now. Okay. Within 45 days, after 45 days. Now in this circular itself, if you see, in case auditor is rendered disqualified due to operations of any condition mentioned in 141 of Companies Act, then the provisions of this circular shall not apply. The circular itself says that, okay, when a person, the auditor is disqualified under 141, circular will cease to apply. Okay, so this was the case over here. Like here for N Limited, So for N Limited, management of N Limited is correct because Bharat has to issue, but management of O Limited is not correct as Bharat has been disqualified. Clear? Any doubts? Any doubts? Any doubts? No? Okay. If no further doubts, what I'll do is let's start the particular next regulation. Very important one. That is regulation 17 and 17A. That talks about the board of directors and the board's constitution. The way we saw for the audit committee, on the same line, it's for the board of directors. Okay. Now, simultaneously, I'll try to provide in a graphical form that, chart form that how it is done for the board of directors. Okay. Now, for the board, we will see a lot of things, top 500, top 1000 listed entities. All these things will come into the picture. Okay. So I will be explaining what are these, but these terms will come and I will be explaining in a while also. Okay. Composition of board. First of all, what is the composition of board as per the SEBI LODR regulation 17 and 18? So the composition of board goes like this way. Now, for the board of directors, let's say we are talking about in case of a board of directors, first of all, there should be at least one woman director. At least one woman director. Okay. And if that entity is in the part of, top 1000 or top 500, if it is part of top 1000 entities, then that woman director has to be independent, at least means at least one woman independent director. Okay. In case of others, it is fine. In case of others, it will be the same as above. That is one woman director. It can be independent, it cannot be. But for top 1000, at least one independent woman director should be there. Okay. Now, that was for the women independent directors. Okay. Now, again, the another criteria that is there. Okay. So I'll show you. Now, for top 500 or for top 1000 entities, okay, for top 500 and for top 1000 entities, these entities, how I'm calculating these top 500 and these 1000 is based on the market capitalization. So the important term for me or important criteria is for me is basis of the market capitalization at the end of immediately preceding financial year. At the end of immediately preceding financial year, that is the main criteria I need to see for the top 100, top 500 companies. That is a market capitalization. Clear? Okay. Now, that was the market capitalization. Now coming to the board of directors. Okay. We saw one woman director is required. Okay. And there are minimum requirement also that, whether what should be the constitution of the board of directors with executive, non-executive, independent. Okay. And that goes like, if your chairperson of the board of directors is a non-executive director, then at least 1/3 should be independent. Okay. Where chairperson is not a regular non-executive director, then half of the board shall be independent. So if chairperson of BOD, if chairperson of BOD is a non-executive director, then at least 1/3 of BOD shall be independent directors. Now, if your chairperson is the executive, means not an executive director. Okay, not a non-executive, basically. If he is not a non-executive director, okay, then half of the board shall be independent. Shall be independent means shall be of independent directors. Okay. So if chairperson of the board of directors, okay, is non-executive, 1/3. If he is not a non-executive, then at least half of the board of directors shall be independent director. Okay. And another criteria is, irrespective of the board of the chairperson, okay, not less than 50% board of directors, not less than 50% means more than 50% board of directors shall be non-executive. So although we were talking about independent directors, more than 50% of BOD should be non-executive directors. Okay. So we were talking about independent directors, but now if, like irrespective of anything, at least 50%, like more than 50% should be my non-executive director. So let us see over here. So board of directors shall have an optimum combination of executive and non-executive with at least one woman director, not less than 50% of non-executive directors. For top 500 listed entities, at least one independent woman director by April 1/1/2019, and for top 1000 listed entities, at least one woman director by April 1st, 2020. But both of these deadline has passed. So as of now, there is no distinction between 500 and 1000. So it doesn't matter it's a 500 or 1000. They are required to have at least one woman independent director. Okay. If the chairperson is a non-executive director, at least 1/3 of the board shall comprise of independent. Otherwise, if a chairperson is not does not have a non-executive chairperson, then at least half of the board shall comprise of independent directors. Okay. Now, if the non-executive chairperson is a promoter, okay, is a promoter or any person or person occupying management position at the board of directors or at one level below, okay, like like a non-executive chairperson is a promoter or is related to any person occupying management position or board of directors or one level below, then at least half of the board of directors shall be independent. Again, if the chairperson is non-executive, in this case, if he is non-executive, okay, but he is related to any person occupying management position or at the level of board of directors or one level below, then this 1/3 will become half. So if non-executive director related, okay, related or is promoter, then this will turn to half. Half of the board of directors should be independent. When I say related to any promoter, how it is that? So related means, let's say, for example, if that person, that the non-executive director is a relative of any person who is at the CFO, CEO, or any such position which is directly below the board of directors, then also this will apply. Or if he is a part of the promoter group, then also this condition will apply. Okay. Now, another case is that board of directors of top 2000 listed entities. Okay. Top 2000 listed entities shall not comprise of not less than 6 directors. Means there should be at least 6 directors in board of directors. So minimum 6 directors for top 2000 entities. When I say 2000, based on the market capitalization of immediately preceding previous year. Okay. Again, now, if there are SR equity shares, if there are SR equity shares, irrespective of your board of director, a chairperson is an executive, non-executive, irrespective of that, your half of the board of directors should be independent. So if you have a SR outstanding SR equity shares, at least half of the board should be independent. At least half of the board should be independent. Clear? Any doubt till now? Any doubt? See, there are lot many conditions and lot many numbers. It's very important to understand. Shrishti, can you explain your question with respect to the half is already executive one, in where you are talking about half executive? See, over here, if you're irrespective of anything, half of the board of directors should be non-executive. Here, half of the board of directors should be non-executive. Yeah, see, okay. If chairperson of the board of directors, okay, I'll explain with an example. Let's say if chairperson of BOD is not a regular non-executive director. Okay. When I say not a regular executive director, you can say it's an executive director. But there is as such no term of executive director. It's a non-executive director term. Okay. So if he's not a regular non-executive director, okay, then in that case, what is the scenario is half of the board should be consist of independent directors. Half of the board should be of independent directors. But when I say no, this particular chairperson, okay, this particular chairperson is a non-executive director, then this half will become 1/3. Okay, if there are SR outstanding equity shares, although the chairperson will be non-executive plus SR equity shares, okay, then in that case again it will become half. So it depends upon how it is done. Clear? Yes, these definitions, these conditions are different from Companies Act, I agree. But these are mandatory to be followed. Any other doubt? Any other doubts? So, yeah. So, non-executive director, same as defined under the Companies Act. Then, so yeah, in case, let's say for example, if the provisions of the SEBI LODR are stringent one, then they are required to be followed compared to the Companies Act. If there is a conflict, then you need to follow both. You need to have both of the scenarios. Okay, so there was one question that can non-director become a member of audit committee? That depends upon. There are conditions, but again, that's a very case-to-case basis. Sumit, can you specify any such condition where there is a direct conflict? Because the scenario is there should, like, there are, as far as I know, there are no direct conflicts between the Companies Act and the SEBI LODR. SEBI LODR can be stringent, but it is not something, in a direct conflict way. SR equity share, as I told you, SR equity shares are equity shares where do you have a superior right. Superior right compared to the normal equity shares. Any further doubt? See, with respect to SR equity shares, there are separate guidelines, okay, in ICDR, that how SR equity shares can be issued and superior voting rights compared to there are detailed guidelines given in ICDR, issue of capital and disclosure requirements, okay, where there is a compliance requirement, there is a regulation 21 triple EA, okay, there is the size of the SR equity share, what should be the total overall promoter group, a lot of things are there for that. Okay, there are lock-in period, there are pledge requirements, a lot of things is there. It's not a simple just superior voting rights I'm talking about, but again, they can have like minimum of 2:1 voting rights, maximum of 10:1 voting rights compared to the ordinary share. Means let's say ordinary shareholder has one vote per share, I can have up to 10 votes per share. That's the SR. Any other doubts? Any other doubts? See, now there is one doubt with respect to the non-executive director. Okay, meaning of non-executive director. If you see the Companies Act also, Companies Act does not specifically include any definition for the non-executive director, but that is based on the one, there is a rule or understanding under Rule 2K of the Companies Rule 2014 with respect to the full-time director and with respect to the concept of executive director. Okay, based on that, it is defined what is a non-executive director. So you need to refer that particular, rule or same in the Companies Act. Any further doubts? Okay. If no further doubts, then I'll continue. So we were talking about composition of board till now. Now, what we need to see is that if that there are certain additional conditions with respect to that composition of board. Okay, so first, now if you want to appoint any person who is attended the age of 75 years, okay, then and you want to appoint that person as a director, okay, as a non-executive director, then what is required? Special resolution is required first of all for that. Okay, and explanatory statements are required to be annexed, okay, in the such motion to indicate the justification for appointing such person. So if you want to appoint a person, or if you want a person to continue directorship, okay, who has already attained the age of 75 years, in that case, a special resolution is required and with a justification. Was attained the age of 75 years, justification and a special resolution is required. Okay. That is with respect to person who has already attained the age of 75 years. Okay. Now if the listed entity wants to appoint a person on the board of directors, okay, then what they should do is they should at least take approval in the next general meeting or within 3 months from the appointment, okay, for such person. So there is a condition that approval of shareholders for appointment of a person on board of directors should be taken either within the period of 3 months from the date of appointment or at the next AGM, whichever is earlier. So that is the requirement for appointment of the board of directors. That if you want to appoint a board of directors, that board of directors should be appointed, but an approval is required in the next AGM or 3 months from the date of appointment, whichever is earlier. Now, let's say, for example, if that particular board of directors was already, rejected earlier, what you will do? In that case, if that board of directors was rejected earlier by the shareholders, then we cannot appoint that board of directors again without prior approval of the shareholders. So we need to take a prior approval of the shareholder when a particular board of directors is already rejected. Again, when we are circulating a notice, okay, that board of directors has been, is required to be reappointed, which was rejected by shareholders, we need to provide a detailed explanation, okay, and a justification, like detailed explanation and justification by remuneration and nomination committee, okay, that why we are recommending such a board of director for appointment or reappointment. Now understand here, the work of the nomination and remuneration committee is to suggest the name of the board of directors who is required to be appointed, plus what remuneration he will get. Okay. In the current case, if the nomination and remuneration committee is recommending a person who is already being rejected earlier by the shareholders, then they need to provide the detailed explanation, okay, in the notice of that particular for such resolution which is required to be passed by the shareholder, that why they are recommending his name again. He was rejected earlier, why you are recommending his name again? So a detailed explanation and justification by the nomination remuneration committee and the board of directors for recommending such a person for reappointment is necessary. So this is with respect to appointment of the board of directors and the composition of board. Okay. Now I will be talking about the meeting of board of directors. So board of directors required to meet at least 4 times in a year, and maximum gap should not be of 120 days. Remember, audit committee 4 plus 120, same 4 plus 120. At least 4 times a year, plus there should not be a gap of more than 120 days between any two meetings. Okay. Now the quorum for each and every meeting. Okay. The quorum for the board of directors for top 100,000 listed and 2000 listed. It was earlier the bifurcation because 1st April 2019 was the due date for top 1000 to implement this, and 1st April 2020 was the due date for top 2000. But as of now, both of the dates has been passed. So the quorum for top 2000, for board of directors meeting is 1/3 of its total strength or 3 directors, whichever is higher. Okay. However, there should be at least one independent director in that. Again, when I talk about top 1000 or 2000, it's based on the capitalization at the end of immediately previous year. Clear? Any doubt? Any doubt till now? Okay. Now, if this is till this is clear, that was meeting of the board of directors and the composition of board of directors that we discussed. Okay. Let us see some questions on this first. Then I'll proceed with rest of the board of directors topic. So the question is, CAS Limited is a public company which got listed on BSE NSE in 1516. Based on it is among the top 500 listed entity based on the market capitalization. JP Budge and Company's CA firm has been appointed as a statutory auditor for FY 2021. Now, Pankaj Budge was assigned on its audit as an engagement partner. He is verifying the composition of board of directors. Okay. So there are 9 directors, out of which 4 are non-executive directors, 3 are independent directors. 1 woman director, she is an executive director. Mr. Madhusudan Mehra is appointed as a non-executive chairperson of the board. He is a brother-in-law of managing director of CAS Limited. What should be the optimum composition of board of directors? Now you tell me what should be the optimum composition, whether this is in compliant or not. 2 things: optimum or compliant composition. Of BOD, what should be that? Okay, you tell me what should be the compliant composition of board of directors here. Whatever we have discussed, based on that, what should be the compliant composition of board of directors? So the points you need to focus, everything is there, we just now discussed. Go back to your notes, what we were discussing, the charts and everything, and check what should be the optimum board composition over here. Correct, Kaushiki? Come on, guys, pretty simple. Yeah. Correct, Kaushiki? Correct, Shishti? Come on, guys, pretty simple. Nothing difficult here. Correct, Rahul? Manini, you need to provide what should be the optimum composition of board of directors over here. Okay, let us see the provision and rediscuss again. Okay, board of directors. If, first of all, if it is, first of all, at least one woman director, top 500, at least one woman independent director. In this case, this is top 500 or top 1000. So I should have at least one woman independent director. Fine, that should be there. Now, first of all, I'll see they have only one woman director. They are saying only one woman director, and she's an executive director. She is not an independent one. So there should be an independent one. Fine, that is a non-compliant. First, we identified. Number two, Madhusudan Mehra, appointed non-executive chairperson. I know that if a non-executive chairperson is there, one-third of the board should be independent. However, if he is related, so what was the provision with regards to the relation? If the non-executive chairperson is a promoter of the listed entity or is related to any promoter or person occupying management position at the level of board of directors or one level below, then at least half of the board should be independent. Here, Madhusudan Mehra, he is in brother-in-law of managing director of Kayaks Limited. Now the question will arise whether the brother-in-law will be known as a related one or not a related one. Who will be taken as a related over here? Who will be taken as a related over here? Now that is a very important to understand whether he will be counted as a relative or not. Okay, so I'm sorry. Yeah. Now, when we talk about related party, basically, okay. So related party means any person forming part of the promoter group, any person holding equity shares of 20% or more, 10% or more directly or indirectly, okay, he'll be counted as the related party. Okay, here he will be, if you see here in the current case, he is a relation like he's a brother-in-law. Okay, now the term relative is defined under the Companies Act, and in that case, if you see the term of Companies Act, what term in the Companies Act says that there is a particular section in the Companies Act which defines the term relative, and in that particular term, brother-in-law, that is, if you see, just a minute, I'll also show you that particular definition. Just let me bring on the screen the term relative. So there's a list of relatives defined. Okay. So okay. What includes in the term relative as per the Companies Act? Father, mother, son, son's wife, daughter, daughter's husband, brother, sister. But when I talk about brother-in-law, okay, that is my sister's brother. Now, in the current case, he's my brother-in-law, but brother-in-law is nowhere defined. Okay, brother-in-law is nowhere defined. The term brother-in-law, that is sister's husband. Sorry, sister's husband is nowhere defined here. Okay, it is only defined that sister. So, can he be counted as a relative? Answer is no. He cannot be counted as a relative in the current case. So, still, my board of directors should be 1/3 of the independent directors. He is not a relative because he's a brother-in-law. Clear? So, based on the term brother-in-law, I will not be counting him as a relative. In the given case, there should be 1/3 of the directors that should be independent director, not half. Okay. Now, if 1/3 of the directors, independent directors should 1/3 of the directors should be independent director. Okay, because chairperson is a non-executive. Then 1/3 should be independent. Now, in this case, how many independent are there? So we have 3 independent directors. Okay, 1/3 should be independent. 9 directors were there. 1/3 independent. That is fine. We have 3 independent directors. So there is no non-compliance. But there was another condition which says that at least 50% should be non-executive directors. At least 50%. Okay. So in our case, there are 9 directors. If I talk about 50%, okay, there should be 4.5 for 9. If I round it off, it will become 5. So at least 50% should be my 50% should be non-executive directors. That is 5 non-executive directors. That is 5 directors. I have 4 directors as a non-executive. So there is non-compliance with the non-executive director. So one non-compliance I identified with respect to the non-executive director. One non-compliance I identified with the woman director because she is an executive, not independent. Clear? So my optimum board composition or compliant board composition will be 1 woman independent director, 1/3 independent director, and 5 directors as a non-executive director. I hope I'm clear. And you understood the term relative, that brother-in-law not defined under the Companies Act. Okay. Any doubt till now? Any doubt? Any doubt? Yes, Madhusudan will be counted as a part of non-executive director. These 4. So chairperson basically is one of the directors from the board of directors only. Okay, so it is not said that he is appointed other than the 4 non-executive directors. It is said that Madhusudan has been appointed as a non-executive chairperson. Now, when anyone is appointed as a chairperson, by default he is a director. That's why he's being appointed as a chairperson. Like from the board of directors, one will be appointed as a chairperson. Any doubt? Okay. So, guys, we discussed about the audit committee, composition of audit committee. Just a quick recap what we discussed today. Okay. We discussed about the Regulation 18 audit committee. We discussed about section 177 of Companies Act, that is again audit committee. Okay. We discussed about then vigil mechanism. Okay. Roles and responsibility of audit committee. We discussed about the resignation of the resignation from auditor and their requirements based on the circular. Okay. Then we discuss about the composition of board, regulation 1717A. Okay. What should be the compliant board composition? We discuss about the quorum, meeting of board of directors. In the next lecture, what we'll be doing is I will be discussing about the duties and roles and responsibility of the board of directors. Okay. And I will be discussing about maximum number of directorship that a board of director can have. Plus, I will be discussing about the other topics like related party, other committees, remuneration and nomination committee, risk management committee. So I'll be discussing about other committees also, okay, in the next lecture. So I'll suggest please revise this particular topic after this lecture. And before start of the next lecture, please go through the various, other requirements like you can say risk and nomination and remuneration committee, that is regulation 19. Okay. Then we have a stakeholder relationship committee, regulation 20. We have a compliance certificate requirement that I'm going to discuss. Okay. Then the risk committee, risk management committee, regulation 21. Related party transaction disclosure 23, 27, 46, and schedule 5. So all these things I will be discussing in next lecture. Okay, guys. So if no further doubts, then I propose to close this particular lecture and I'll meet you in the next lecture. Thank you. Thank you and have a nice day.